Hi guys, thanks for tuning in to another episode of Nuggets News. Today we're back to our monthly mining update. We welcome back Will from Mining Store. How are you, Will?
Yeah, very well, Alex. And yourself?
Good, thanks, mate. It's been a very busy month. We had the halving a couple of weeks ago. We did a video preparing everyone for that and what we thought might happen. But today I really want to talk about what has happened there, and there's some pretty interesting consequences, but more so what's happening now with fees. There's been a lot of new people enter the space. We've had a big run up in price, and once again, we're back to this situation, not quite as bad as December 2017, but it's very expensive. And now some people have experienced this, and some beginners don't understand what's going on. And we're getting messages saying, I withdrew from an exchange. It's been 12 hours now, and panic stations and whatnot. So today we're going to walk people through how this all works, talk about this debate and why we don't just increase the block size, and how this has gone on for years and years, and then talk about some of the other mining stuff like usual at the end. So any thoughts on that just generally before we dive into it, Will?
No, I think it's just a perfect topic to touch on. I mean, it's a classic example that it's not a problem until it's a problem. And with this Bitcoin halving happening, we'll jump into the details of what actually happened with the transaction fees. But it's kind of come to earth again that, oh, well, I'm paying $6.50 just to transfer any amount of Bitcoin. There's something fundamentally wrong here in the long term. So, yeah, we'll jump into the Lightning Network. We'll jump into, why it's 1 megabyte, pros and cons. But, yeah, it's definitely an interesting topic to cover at the moment.
And always something that gets people fired up. And I'm sure people from, we're going to get into the Bitcoin Cash and SV hard forks as well. Everyone has a strong opinion on this, and people get very upset about it. But we'll do our best to remain neutral. Yeah. Okay, so we've got a few slides. We've already, I guess, touched on what we want to talk about today. Anything you want to add there from the FPGA stuff?
Not so much. If we want to just tap into the Bitcoin halving, we'll do a quick analysis of it. Obviously, it was pretty much exactly as we predicted what was really going to go on there. We saw the network hash rate reduce substantially from 121 petahash to 90. So about a 25% reduction, which is very sizable. We'll touch into a little bit later how that's affecting profitability, or I suppose the lack of profits for Bitcoin miners at the moment. But yeah, that's a big reduction. It still looks like it's in free fall to me. It does look like it's finding a little bit of a floor at 90. But yeah, we could either see, price will have to come up. Otherwise, the network hash rates, people are not willing to keep their miners on at the moment.
Yeah, so in the pre-interview, you said use the word dire, which I was kind of a bit surprised about that. So we've seen that fall. To me, we maybe saw it actually increase beforehand, as a lot of miners want to mine as many of those blocks where they're going to get 12 Bitcoins reward instead of 6. And now they've turned those off. So, look, I'm not sure if it's, bad, if it's going down, or if before it was going up, if that makes sense. And it's calming back to a natural equilibrium now.
I think the main topic there is too much technically hash rate on the network. It's over hash. We don't need this amount to keep the network secure. And the rise in hash rate potentially wasn't from new miners coming on, but the existing miners going, let's ramp up, overclock our settings to make as much as this double rewards as what we're going to get in the next month. So we saw a massive rise. I think a lot of the decline is them now underclocking their units again, and we've seen it come off, and a lot of people obviously turning their miners off. But the term dire situation I mentioned there, it's like your pay getting halved on the first day. You're going to have to make big adjustments in your life. You're going to reduce costs and things like that. So at first it's going to hit hard. Things are looking dire at the moment, but it's really going to be a matter of either hash rate coming down or price coming up that's going to determine the future for Bitcoin miners, I think.
And the other day we had a difficulty adjustment. So how much of the 25% hash rate did that take into account on the day that it occurred? And I think blocks are still averaging around 12 minutes instead of 10 minutes. So there's another difficulty adjustment. I think, again, we're only a few days away now from the next one, but that's all going to come back into equilibrium, I think, within that next adjustment.
Yeah, that's correct. So obviously, like when we get that difficulty adjustment, it's every 2 weeks, by the way. And so if there's a ridiculous amount of hash power on the network, and then we see a massive drop, but the reduction hasn't happened yet, that's going to affect the block time that it's actually to mine the coins as well. So I think, as you said, we're around the 12-minute mark still. It should be averaging around 10 minutes. But yeah, it's interesting to kind of see what's going on.
And just the one caveat to that is it is 2 weeks the difficulty adjustment on the current settings. So if the current settings are then more miners join and more hash rate, we might actually get there in 13 or 12 days rather than the 14 days. And the same happens on the flip side. So now this is where people worry about the death spiral. If miners were to keep dropping off and all of a sudden it was, let's say half the miners dropped off and that interval actually took 28 days to get to. In that period, we could have had more drop off. And then, that's that death spiral and difficulty adjustment that people worry about. But I think it's really interesting that we've actually had 25%, pretty big chunk. But so far, everything's kind of adjusted pretty nicely.
Yeah, it's been pretty good, to be fair.
Yeah, cool. Okay. So next slide here, I'm on slide number 4, the transaction fees. And you go, and then I might talk about the history before the slide.
Yeah, for sure. I think, when I was looking to pretty much build the slides for today's episode and kind of, looking at the analysis of the Bitcoin halving, most of it was as we predicted. We kind of saw what was going to happen. But the really interesting thing, and coming back to that 1 megabyte block size debate, was that when the Bitcoin halving happened and we see a massive reduction in hash rate, but lots of people transacting on the network, obviously it's one of the biggest topics on Twitter and what people buying and selling, this transaction fee has pushed up substantially to about $6.50 USD. At that point, obviously, if you're trying to transfer someone $50, it's not really worth it. You're losing a large portion of what you're sending. So, yeah, I think it really kind of brings that debate back to surface. Should the Bitcoin, block size be increased from 1 megabyte, or is Lightning Network going to help out with this second layer function and stopping the clogging up of the blocks of each block transaction? That's one thing that I noted.
Yeah, I just want to make sure people at home understand this concept. So it's really important that more miners doesn't mean more transactions that are cleared. So we can have 1 terahash or 100 terahash, as long as the Bitcoin has the difficulty has adjustment and found that new equilibrium, it's going to still clear 100 transactions every 10-minute block. So You can't say we need more miners to clear those transactions. The reason that it's got clogged a little bit at the moment is because more people are using the network. But it's also that little adjustment where now we're waiting for the difficulty to readjust. So instead of 10 minutes, we're now 12 minutes that we're waiting for each block. And that little 20% difference can actually make a fair bit of difference, can't it?
Well, yeah, it's exactly right. I mean, you're exactly right in saying it's not the solution to say we need more miners on the network. That's not the solution. But if there were miners on the network, then they would have to compete more with each other. They would say, okay, I'm willing to take $2 per transaction because other people are. So that it's not a solution, but it can help. But when you see this massive reduction on the network and people transacting, it's when you kind of go, all right, this is not scalable. If all of a sudden the fiat system collapsed and everyone wanted to start using Bitcoin, I don't believe the infrastructure is there right now to support that level of transaction.
Yeah.
As I say, I think it needs to be a push of something, whether it's the Lightning Network to gain more adoption or, some kind of solution which is above my brain to solve.
Yeah.
But it still just raises that kind of debate or, potential issue.
Yeah.
Nothing that I don't think won't be solved in good time, but it's an interesting topic to cover.
Yeah, I just want people to understand that 1,000 times more miners doesn't mean 1,000 times more transactions that can go through. It always adjusts, and it's going to have that block every 10 minutes once things get into equilibrium. So you've touched on a few of the pros and cons. I guess I might just rewind a little bit. So Bitcoin, the white paper come out and people quote the title as a peer-to-peer electronic cash system. And that's the idea where Will and I can send a transaction to each other. And back in the day, you could do that for free. You didn't even have to pay a transaction fee and you'd still get included in the next block because miners are going to do that because they get the block reward anyway. But exactly. It was very obvious from early on that when things got busy and fees were spiking, you just have to extrapolate that out and say, geez, if this ever gets mainstream adoption, we're not going to be able to have that throughput. So there was a big debate for years and years on Reddit, and this is where people get into was there censorship? There's a theory out there that, Blockstream came out and they wanted that Lightning Network to take all the transactions and get all the money, and they want to be a for-profit company. So I guess that's the kind of two sides to the debate. Do you have any thoughts that you want to add, Will, before we keep going with that story?
I pretty much would just kind of agree with that. I mean, the only thing that I suppose focus on in this area is just, will we ever see the block size increase or not? I think one point to add there, that if you do increase that block size, the biggest downfall is the computer requirement. By, you can't have these smaller, computer required nodes running on the network, which decreases that decentralization. So for me, that's the biggest point of not increasing that megabyte size. But then obviously the downside is the number of transactions that can occur in that second, or that 10-minute period. So yeah, I mean, it's an interesting one, but yeah, we'll just kind of have to see. I think Lightning Network is where things are going to be adjusted first, how much adoption we see on it.
Yeah. And also, just another side note, it was very interesting the other day when those old miner coins moved, the 2009 coins, and you've seen in the headlines that it was from the Tulip Trust. So Craig Wright's list of addresses that he's claiming in court are his, that we had a miner send a 50 Bitcoin transaction and signed it. And then we had, again, the other day, 145 of those as addresses. And it says, calling Craig a fraud. It says Bitcoin's come a long way. We need to, we can't just rely on these constant upgrades. And it basically said that just increasing the block size is kind of a shortcut, and Lightning Network has progressed well. So it's really interesting to know that is someone from 2009 that is saying that.
Yeah, I definitely agree. I think I'm more pro on increasing that Lightning Network than adjusting the fundamentals or anything like that. As we know, usually it is a big change. Like, some people don't realize how big of a change it is. And yeah, I would prefer to see some more off-chain, support to keep it how it is, I guess.
Yeah. Okay. So then we get up to the current sort of 2016, and we've got Ethereum and some other altcoins. So you could argue that maybe that gives them a reason to get a bit more use case, because if Bitcoin's clogged, as we saw in 2017, Litecoin had its huge run because you could send Bitcoin, or you could send your coins to or from your wallet or to Coinbase or to another exchange over Litecoin for very, very cheap compared to the Bitcoin. So that's one argument about how altcoins maybe got a bit more of a market share than they otherwise would have. But this is where the developers got together and said, okay, we need to do something, and SegWit 2x came about. So they were going to do the SegWit upgrade, which separates the witness data out of each block. And all you need to know is that there's actual less data from each transaction that goes in the block. And that actually increases the capacity 4 times. So if everyone used SegWit, then we could now do 4 times as many transactions. So it's a 4x upgrade, basically, you can think of it as. But even 3 years later, here we are, and a lot of exchanges and wallets, I think even Binance, still haven't actually implemented SegWit, because it is a big update that they've got to do for all their cold wallets, and there's a lot of money at risk there and technical things that you need to do. So that is something where I think we got up to 60% SegWit adoption at one point, but it's still something that we don't see a lot of.
Yeah, exactly right. I mean, it's the fact that there are things out there that can adopt and can help this, I suppose, problem, so to speak. But I think the good thing is, it's not until really extreme situations like a Bitcoin halving that we see the effect of it too much yet, which tells me personally that we're adopting it at a fair rate. If so be it, it's new technology for 1 or 2 weeks, and network transactions are high, so be it. But overall, you don't need to make these drastic changes to fix something that's not really an immediate problem.
Yeah, and then so people might have seen this when they set up their hardware wallet, and it says, do you want a legacy address, which means old format, or the new address? So you should always use SegWit wherever you can. It's going to be cheaper for you. And then going on from there, so we had the SegWit, and then the second half of this upgrade was going to be the 2x part, where the group of people, and this is where it gets complicated about whether or not a group of people should even be allowed to have a say or not. So the SegWit upgrade was a soft fork, which means that it's a software upgrade that you don't have to all agree on. It's backward compatible. So I can send Will Bitcoins to his old legacy address, the old format, that doesn't matter. But the 2x part was going to be a hard fork upgrade. And that means that if we don't get everyone to agree on it, we get a chain split and 2 coins. Right. And that's where, even though we had, I think it was 90 something % of the miners on the network were signaling that, yeah, we've got the intention to upgrade, even at the last minute, there was a lot of, what if 10% don't? What if something goes wrong? And you got to remember, there's $100 billion or more at risk, and this is why Bitcoin moves slow. So everyone backed out at the end. We said, look, let's let's shelve this for another time. And that's when we had the Bitcoin Cash say, you know what, we're going to do it. We're just going to go 8 megabytes. And then 6 months later, I think they went 32 megabytes. So that's the story of what happened in 2017 that led to the hard forks and the block size debate.
Yeah, I think just to make like a note for potentially even more novice or people involved in this space, that a really important thing that you mentioned there is the difference between kind of a soft fork and a hard fork. Where a hard fork, if you want to have that adopted, everyone or all the nodes on the network have to upgrade to that fork. So yeah, I mean it's a really cool thing that I quite like about the space. But as you say, sometimes it can lead to that forking off, and you can get a split in the network and get messy. So yeah, hence why things take a bit of time to actually change. You need to have that 100% commitment.
Yeah, and you have the question, well, does it even matter if you have 90% of miners? Because is it more important what users want, or what the actual nodes that are keeping record of all the transactions and talking to each other, what do they want? So this is one of those sort of governance questions that we still haven't solved. The next, I guess, story to that chapter is Bitcoin SV. They took it a step further, and whatever the political side of things are here with Roger and Craig falling out, they said, well, we're going to go even bigger, and their block size was, the next, I think another 4x on top of that, 128 to begin with, and then I don't know what it is now. I'm pretty sure it's unlimited. It's elastic.
It's a lot, yeah. I'm not actually 100% sure, to be honest, but I know it's large.
Anyway, so they can have up to, say, a gigabyte block, or in the future they're talking about a terabyte block. So that means that every 10 minutes, in theory, you're sending around and talking to all these other nodes, and they might have to upload a gigabyte or a terabyte of data, and they might have to try and send that information to propagate it to their 10 nodes around them. So they're uploading 10 terabytes of information every 10 minutes. So This is where, what Will said before, we're talking about, well, is that possible? Joke about...
Yeah, I mean, you're going to have a sizable investment, and it really defeats the purpose of decentralization. Like someone from at home that just has a desktop computer and wants to participate, participation is an important thing. You don't have to be profitable, or you don't have to be a big player, but if you just want to participate in that network, you're going to have substantial hardware to be involved. So yeah, I don't think it's the way to go. I think somewhere in the happy medium, or somewhere with support of off-chain like Lightning Network, I think that's the best way to go.
And what we were sort of talking about there is, not only now do you need the latest mining hardware from Bitmain, but you also need a really good computer. You need a really good internet connection. You need good hard drives and lots of disk space, because you need to be able to write that information to your hard drive. Like, again, this is sort of right at the edge of my knowledge, but that's a lot of information, a terabyte every 10 minutes. So do you want to talk about all that more and the cost involved to keep all that?
Yeah, I mean, it's one of those things that, it's possible to do, don't get me wrong, but at the end of the day, it's really about having that ease of entry. Like, one of the biggest things that we need for this, entire industry, for the cryptocurrency space to evolve, is that mass level of adoption. And, if you create those, barriers for entry, it's really just not going to achieve what we need at this medium point in time. Perhaps, later on down the track, and I think you even wanted to talk about the Moore's Law there, Alex, but there might be things that do warrant going down that level. By that time, it might be more of an ease of entry, but at the moment, it's not a pressing issue.
No, so just to wrap all that up, what the BSV and BCH guys, I guess, argue is that's better. That's the way to go, and have less nodes and have bigger capacity. But what we've seen in, say, BSV, I don't know what the node count is today, maybe 200 or 100, and you've got these, they turn into sort of like super data centers, like big servers, and that's becoming very centralized. But they say, well, that doesn't really matter. It's more the nodes and the number of people in the network that you want to centralize, not the miners. But I just don't agree with that. And what we've got to now is, with the Bitcoin network and 1 megabyte blocks, we've got smartphones that can run a node and keep that 1 megabyte information and propagate transactions. And anyone with a half decent internet connection can keep up with all that bandwidth and keep a copy of the blockchain fairly easily. So I really hope that has made sense. Anything to add to that, Will?
No, I think it's like, it's one of those things that when viewers are watching, they're probably going to have to go back and listen to a couple of things, maybe do a couple of Google searches. But there's a lot of fundamental pieces of information there that I suppose we're trying to not dumb down, but make sense to people. And yeah, definitely go and have a look up and, start looking into how the actual blockchain is constructed and things like that. It's really important to understand. If you don't understand it, you can still engage with the network, no problems. But yeah, it's good to be ahead of the curve, I guess.
Yeah, and I guess the future upgrades that are coming, if you want a detailed rundown on this, watch the interview I did with Andreas Antonopoulos, and that's all timestamped. I'll link that at the end of this. But we've got things like Mast, Taproot, Schnorr, Dandelion. These things help with privacy, but they're also ways to compress that amount of data that you actually need in a block, or batch transactions together and make them more private as well. So when we say SegWit was a 4x improvement, Andreas was saying that some of these other methods might be 10x, 100x, possibly 1000x, and that's hopefully only a year or two away in an ideal world. So it's not like we have no solutions on the Bitcoin roadmap, and we have to take things slow because there's so much money at stake here. And then we've also got the Lightning Network. Again, progress has probably slowed more than we would have liked. We've got the Liquid sidechain, which is, again, just a second layer for exchanges and businesses to send Bitcoins to each other. It's very centralized, but it's another way to free up the main network. And then we've got other sidechains, things that we've been talking about for years that are going to come along, such as the Rootstock smart contract layer on top of Bitcoin. So there's a lot of things that are there, and I just don't want people to think that there's no reason and there's no hope for Bitcoin to ever scale more.
Yeah, exactly. I mean, there's a lot of eyes and ears on the topic or on the technology. And, when you and I follow it to the level we follow it, there's a lot of faith there that it'll grow in good time. These changes will happen. But again, a main point that you make, there's no point in just making these drastic changes. It's not necessary. It's still working. It's still going, it's solving its purpose. So yeah, I think it's a matter of just slow adoption and making the right decisions.
And Bitcoin can always, take on any other improvements or computer science technology that becomes proven. That's where we've seen Ethereum try things like sharding and proof of stake. And they've absorbed something like ZK technology from Zcash now. So this is where you can kind of say, yeah, that works really well. We're going to incorporate that. But let's power through these last couple of slides, Will, because I know you want to talk about the profit ratio here and then a couple more.
Yeah, absolutely. So I believe we're on the Bitcoin mining calc, and this is one, if you look at our previous episode, we had a look just before the halving of what the returns were. I think they were around about like $7 a day or something like that. And obviously that's been smashed down quite a lot now. Okay. So it's good to revisit it and have a look. I think we're at about $1.97 that Bitcoin miners are earning. And that's with a pretty competitive power rate as well. I've put in 4 cents US. So this is more commercial scale operations. Your average home miner just can't compete at this particular point in time. So I don't want to get caught out later. I might, look at Bitcoin mining and come back and say, look, it could actually be profitable to invest in X, Y, Z. This industry does change quite a lot. But just at this point in time, to viewers that are thinking about getting into ASIC Bitcoin mining, I would probably hold clear for the moment. And just wait to see kind of, is Bitcoin actually going to start to escalate in price to subsidize this halving? Personally, and you probably too, Alex, I'll have a lot of faith over the next 4 years cycle that Bitcoin could reach, all-time highs or higher again. But yeah, it's, don't want to rush into these decisions. When you're buying a Bitcoin miner, it's somewhere between 2,500 to 3,500 US dollars, and then you need to get your return on investment back from there. So yeah, you want to make the right decision. So it's something I'll tap on there just right now. It's probably not the time to rush into it, unless you've got zero power costs and you really believe Bitcoin's price is going to come up quite a lot. Then absolutely, I would be taking advantage of that too. But yeah, for most people at the moment, Bitcoin mining is something just to hold off on for the time being.
Yeah, for sure. To do with that and building on it again, one of the things I wanted to talk about was this mining in China. So they do have very cheap power, but it should also be mentioned that they had a lot of the hardware, a bit of a monopoly. So those chips and that manufacturing, and then Bitcoin became popular in China. So they were trying to tinker with and make these ASIC mining devices where a lot of other people around the world weren't interested or making them. So that's where China and Bitmain got that monopoly, and Moore's Law technology should double every couple of years. That was out the window. These things were getting 1,000 times better every few months. And so you buy one and it's almost out of date in 3 months' time. And Bitmain used them, and then they give you their old model. So look, everything was just in China's favor, but that's changed a little bit now.
something to tap on that really recent, and this hasn't been fully confirmed yet, but yesterday there was actually news came out that NiceHash has put a software implementation in that if you mine with them, just 1 second, if you mine with them, you actually can get a 15% increase in hash rate. Now, basically what that is reverse engineering the software that they've put out on these chips. And it tells us that similar to what Apple do, they don't bring out the best possible technology on year 2020. They bring out something that's maybe 60 to 70% so that they know that they can upgrade later. So yeah, there is definitely that kind of mentality. Again, you can still make profit in it, but there are these things to be wary of. It's why we focus more on the FPGA mining side of things, which is what I'll tap into now.
Yeah, and so just tying that all together, you guys have heard me talk about there's big energy, the natural gas guys that are flaring off all their excess gas. That's where these Bitcoin miners are setting up in the US. Iran, somewhere with plenty of oil, natural resources, they are setting up these Bitcoin super farms. So all these other countries want to get into Bitcoin mining game, and that's going to decentralize it away from China with these pools. They're not going to have the monopoly, and also the hardware manufacturing side of things, software, like Will mentioned. It's all getting more competitive and should decentralize, which is exactly what we want.
Yeah, exactly right. So yeah, leading into, I think there's another slide there that I basically have just screenshotted the cost compared to the profit that you're getting, and the top models there, they're actually not even out quite yet. So yeah, I won't go too much more into that. I think we've tapped in enough in terms of the Bitcoin mining. But if we go down to the next slide, I'll tap into a little bit more of why we focus so heavily on FPGA mining. So, I mean, I think a main thing when you're getting into mining is I personally don't believe in, getting an ASIC miner where you're locked to only being able to mine one algorithm. I think that, ultimately what's going to happen there is the biggest players out there, the ones with a competitive advantage, like you're saying, in China with the lowest possible power costs, they're always going to eat up the potential profits that are available. Then we've got things like Bitmain, as we're saying, kind of being able to control the software side of things, or potentially lock the models that they give out. Who knows exactly how much they're doing to that? And yeah, it's just not a competitive way to go about mining. On the other side, with FPGA mining, you're not locked to mining any particular coin. And if you have access to a group that can, build bit streams and allow you to mine any coin on the network, we're able to do that as well. Then basically what you can do is you might be mining Digibyte and it might be getting you $10 a day, but then Digibyte might collapse in price, or the network might get flooded. You can easily move across to another coin and start getting that $10 a day average again. So you're not kind of locked into the big players and what they're doing. You can make those decisions to go and mine this coin, mine that coin. You can be more speculative. You can decide that you're going to mine Handshake, for example, which is completely capitulated in price until it's found its bottom now. And now it's gone up about 30% in the past week. So all those miners that were mining maybe $5 a day on Handshake, all those profits over the past 2 months have increased by 20%. So I think that, yeah, the FPGA mining, personally, that's what we've scaled in. I think we're hosting close to 1,000 miners now on the FPGA side, is definitely the way to go. People are looking to enter in that space.
So something like CKB, I think that was one that you were talking about in a previous episode, and that's now dropped into minus territory, so it's not profitable. So why is that?
Yeah, that's a really good question, Alex, and that's exactly what I'll tap on. It actually summarizes what I'm saying really well. So when CKB first came out, we basically talked with our Bitstream developers and we were saying, look, it looks like it's going to be one of the biggest projects to be released in 2019. We built a private Bitstream for that coin, and we were earning somewhere between $18 and $25 per day on the test net, and then those coins were then redeemed. So it was really profitable. No one else was really aware of it. No one else was mining it. There was low competition, which you won't ever see on the ASIC side of things because all the big players get onto it straight away. So yeah, the returns were up that high, $25 a day. And then what tends to happen is, okay, the average Joe Blow, everyone's kind of figuring it out. They're putting their GPU miners on it. And then what happens is the big players build ASIC miners for it. And that's essentially what has happened. Bitmain has come out, they've gone, oh, there's profits to be made here. We're going to build an ASIC miner. And they build these ASIC miners, which are getting 10, 20, 30 times as much hash power for the same power cost as the FPGA miner. And they soak up all of that hash rate and basically make it not profitable. So we were a couple steps ahead of the curve. As soon as we go see that they're building an ASIC miner for this coin, we look elsewhere and we look to develop a Bitstream for another coin. Handshake at the moment is a good example of that. We've moved to Handshake, mining Digibyte. I think Handshake's actually got ASIC miners coming out soon, so we're now looking for the next coin. And you're able to kind of stay one step ahead of the curve like that.
Cool. Okay, so on slide 8 now, talking about Digibyte. Anything to add here? It's had a big rally.
Massive rally. So, yeah, I mean, it's one of the, I think there's a couple points to make about Digibyte, and one of it ties to actual FPGA mining strategy. I think people too often, they get caught up, and I know I probably speak about it a lot, is your dollar a day mined. I'm getting $5 a day, I'm getting $10 a day. But in reality, miners are not selling their coins on the day they're mining them. So it's not the best measure. If you can see Digibyte there, obviously it was tracking at a much lower price. And then we've seen a 400% rally. So for those miners that were mining Digibyte and getting $3, $4 a day, those coins, they're holding them. They're not selling them at that point. If you go to the next slide, you can actually see how high Digibyte's price has been. And you can see, it's not the greatest image, but you can see there's like a consolidation box in blue down the very bottom there. And that's a period of, say, maybe six or so months. So for 6 months, you're getting $3 or $4 a day. Then you get this 400% price increase. And all of those coins that you've mined have gone up in value. Now, of course, the other thing can happen. It can go down and your average day goes down. But that's, I suppose, similar to trading. The analysis that we do as a community, we look at these coins that have upside potential. The other one is Handshake at the moment. I haven't got a chart of Handshake. I probably should have put one in there. But Handshake's basically just gone down like this, and now we've started to get a bottom. And so a lot of our miners are switching across to Handshake in anticipation of 20, 30, 40, 50% price increase to increase all of that mining return.
Absolutely. That is the big punt, risk to reward with any investing, whether it's mining or not, whether or not a shitcoin is going to keep going down or your coin's going to go up. And that's where, as a more advanced trader, it's something that Will and I have spoken about maybe doing an episode on, is talking about possibly hedging. So now I'm really excited about FTX. They brought out their hash rate contract. So big professional miners can now hedge the Bitcoin price with Bitcoin futures contracts, but hedge the hash rate. And they can say, well, if hash rates falls, I'm not going to be profitable. So I can start to hedge and I'll profit if price falls by shorting that contract. So this is really advanced trading strategies. We'll get into that in a future episode. But that's also possible with the coins if they're listed and tradable with futures and leverage and that on other exchanges. You can do those strategies.
Yeah, I think it's really cool, as you say, that these different derivatives are coming out and making it more possible to adopt more advanced trading or mining strategies. I think that it's like trading and mining are very similar. You can be a beginner trader and you can make good money, or you can lose money. You can be a beginner miner and you can make good money, or you can lose money. But if you really start to think about it, 3 or 4 steps ahead of the curve, and you start to adopt these strategies and trade the coins that you're mining, and not just mine the coin that's earning $10 a day because it's earning $10 a day, but look at the charts and start to think, okay, this one's earning $5, but it could potentially rise 400%. That's when you really start getting your bang for buck, I suppose. So, yeah, I mean, it's interesting points to cover, but I think we've tapped on the FPGA enough for the moment. What do you reckon? Is there any other points that you wanted to cover for the May update?
No, I think that's really good. Again, guys, there's been some good questions and comments down below. Let us know what you want us to cover. This one's been a lot of talking about what's going on, and I don't mind doing those if you don't like the slides. Some people like the prices and the charts. So yeah, just continue to get feedback. We want to develop this episode. I really like the way it's growing, and I think it's good timing. A few episodes and then the halving and whatnot. You guys have been busy. It's interesting. I think you said 1,000 or so miners you've sold, and plenty of our community. So yeah, it's not for everyone. I think some people enjoy this episode that aren't miners as well. So it's good.
Yeah, definitely. And I think I'm the first one to say it. Like, mining is not for everyone. You really need to have that mentality that it's a long-term investment. That you're basically you've got to be comfortable with sometimes getting a lower dollar a day average, but mining these more speculative coins. But just on that note, with your community members, we've had quite a few come across recently, and the caliber of I suppose members that are coming across, they're actually scaling quite largely on the mining side. I think I won't mention a name obviously, but one of them started off with about 10 FPGA miners and looking to adopt the compound strategy. So it's been really great to communicate with the Nuggets members and get them involved in the mining side too. So yeah, credit to the Nuggets community as well.
Yeah, it's 3 years since we started the premium area, and you really do feel like, and I know the guys that have been there for that long feel like their knowledge is just grown and grown. I watched an old video of mine the other day, and I was like, pretty ordinary as well. So everyone's learning.
But it's great though, because like some of the newer members that come to Mining Store as well, I look back from 2 years ago, complete novices, and now they're some of the most experienced. You know, I even go to them. You know, they're following various projects, and yeah, it's the best thing about this space. Like, you know, everyone kind of contributes and helps each other out. But we'll wrap things up, Alex. It was a pleasure having a chat, and yeah, all the best for the month ahead.
Thanks, guys. Talk to you soon.
Take care. Bye.